drop a heart when you hear sound.
Is the sound working? Got some sound for a second.
Yes.
It's
yes.
working? Okay, fine. No. We're setting this baby up 40 minutes. So today's a Q&A. We already have a lot of questions coming in. Well, I don't know if they can hear us. Somebody said no sound, maybe back.
She's off in clear.
Show this song, man.
Yeah, this is on. Try to up the line. This one.
Why?
The front.
Yeah,
Can you speak?
Oh.
Testing.
Can you hear us? Testing.
No, the line is not working.
It's delayed, right?
Yeah,
It's good now.
Yeah.
Somebody says it's good now. Okay, is everybody? I got a message from Irene that it's good now. Can a few more people let us know if the sound is working so we can start taking? met her sound in the past. She's going to be reading out questions. So this is a live Q&A, a tax strategy, really for you, the business owner, to ask any tax-related tax questions. And we're going to be answering them live here. Any questions that you have, there is nothing that we're going to hold back. As a matter of fact, that person that participates the most gets free things, all right? We're giving things away today. We got the Thinking Outside the Tax Box. This thing on Amazon is like 21 bucks. We'll ship it to you for free. We got one of the most popular ebooks out there, probably. My S Corporation Tax Secrets, okay? We also got some, what are these called? Coasters? Coffee mug coasters, books, mouse pads, whatever you want. We're giving it all away, but you have to participate with questions, and we're going to pick a winner. All right, Mariana, first question. Who we got up there?
All right. We have a question from Keith.
Keith.
Hi,
Hello.
Keith.
First of all, Keith, say hello in the chat, Keith. Let's go.
He says, hi there, hi back. I was wondering if there is an effective way my business partner and I can write off the life insurance premiums paid for our buy-sell agreement as a business expense. Thank you.
Elaborate on that question, the buy-sell agreement and the life insurance premiums. Next question.
Okay, question from David. David, if you're with us, say hello in the chat. I have an S-Corp, 2 partners, 20 years in business, $600K in the checking account. Because the formula to distribute profits was outdated, what is the best way to get that money out while paying least amount in taxes?
All right, so one more time. David, right? He's got S-Corp 2 partners.
Mm-hmm.
Okay, and they have $600,000 in the checking account.
In the checking.
And the question is?
Because the formula to distribute profits was outdated, how can we get that money out while paying the least amount in taxes?
Okay, this is a great question, by the way. David, awesome question. Say hello in the chat. Let me explain something. So you are an S corporation. It doesn't matter how much money you have in the bank at the end of the year, because it could have been that it was also the money that was being transferred over from last year. What you pay taxes on in your S corporation is profits. Okay, not distributions. I'll give you a great example. Let's say you made $1 million in profit, okay, and you only took $400,000 in distributions. You have $600,000 left, which is your $600,000. 3 years have passed. Okay, 3 years have passed. The same money is sitting in a bank account, and now you want to distribute it out. There is no tax on it because you already paid taxes in the year that you made that profit. You don't pay taxes on S corporation distributions. As a matter of fact, S corporation was designed for small business owners for you not to pay taxes. Number one, on distributions, so you're not double taxed compared to the C corporations. Number two, to help you save money on the on self-employment taxes. So to answer your question, David, the $600,000 that can be distributed to you and your partner, however the terms of your operating agreement is, but you're not going to pay taxes on it if you really are an S corporation. Next question.
Okay. Question from Iron.
Iron. Hello, Iron. Say hello in the chat, Iron. By the way, guys, anybody that participates the most is going to get Thinking Outside the Tax Box, all of these things here for free. Mariana will actually be choosing the winner, okay? So, this is the toughest job for her. Okay,
yes.
Iron. I think we had Iron on our previous calls, no?
Yes, we did.
All right, let's go. By the way, I have a question for everybody that's watching. If we set the studio up again next time, but this time, we'll give you a call-in number where you get to call and actually ask questions. Would you be interested in that? Please let me know in the chat. Mariana, go for it. What's the next question?
Okay, question from Iron. I'm an S-Corp owner. S-Corp owner is taking a payroll. He took a shareholder distribution. Will he be taxed on it, and what form should he be given?
Okay, so S corporation owner took payroll, right? And will he pay taxes on distribution? Correct?
Yeah, will he be taxed on it,
Okay.
and what form should he be given?
Okay, great question. So, Iron, you as a business owner that have an S corporation, you're required to take payroll, a reasonable compensation. We always talk about this, right? And I have plenty of videos, by the way, on my YouTube channel for you to take payroll. Now, you take payroll as an S corporation. You have what's left over, just like I did in the previous example, profit. So let's use the same example. Got $1 million gross revenue, okay? Let's say expenses were $400,000. Then owner's salary was $100,000, okay? Now you've got $500,000. Okay, so we said this is expenses, and this is, we said, owner salary. I'm just going to put OS. We got $500,000 right here, profit. Oh, I don't know, my handwriting is terrible. Okay, $500,000 profit. Now, you as an owner are going to pay taxes on your owner salary, $100,000. At the end of the year, your S corporation should issue you what's called a K1. Okay, that K1 is going to report $500,000 profit on which you have to pay taxes. It doesn't matter how much money you take out as a distribution, you're still going to pay tax only on $500,000. You might say, well, Boris, I only received $300,000 as distributions from the business. I understand that, but overall, your profit, right, is $500,000, and that is what your S Corp K1 is going to report to you. All right, hope this is clear. Let me know if this is clear, Iron. Let me know in the chat. Next question.
Question from AJ.
AJ, what's going on? Say hello in chat, AJ.
Can you clarify the exact steps I need to take as a 100% owner of my S Corp with no employees in order to maximize deductions for my health insurance premiums?
Okay, so he's an S Corp owner. And he wants exact steps to take. He's basically saying, Boris, give me the secret sauce. We're gonna do it right here, right now. Who's ready for the secret sauce? By the way, if you guys pay health insurance premiums, I'm gonna show you right now how you guys can put probably on average about $3,000 maybe in your pocket at least right before we end this live. Who's ready for this? Say me in the chat, and we're gonna give away the secret sauce of this, all right? Am I getting readies in the chat, Mariana?
Not yet.
All right, we're not disclosing this until you say ready in the chat. Who's ready for the secret sauce? Let's go. We're getting it?
Not yet, but it could be. We're getting them.
Okay, cool. All right.
We're getting them.
All right, guys, so here's the thing. I have a very detailed video on YouTube about this, and we're going to probably post it up later, but, give you the link later. But here's the thing. If you have an S corporation, IRS allows you what I like to call double dip into your health insurance premiums as a deduction. Meaning, if you own more than 2% of your share S corporation, which most small businesses own, right? It's very rare you'll find somebody owning 1% of their S corporation. If you own more than 2%, what you can do when you pay premiums for your health insurance, okay, they are tax deductible. But also, you save on FICA taxes. It's a double deduction. Now, the health insurance can be either on your name or it can be in the business's name. It doesn't matter. The business can pay it directly or the business can reimburse you for those payments. Those are the rules to follow. That's it. But now how do you maximize on deductions is that it has to be reported on your W-2. Okay? It has to be reported. Mess this one up. It has to be reported on your W-2. Now, on your W-2, you have what's called a reasonable compensation. You as an S corporation owner, for argument's sake, right? Let's assume your reasonable compensation, I'm going to put RC, is $100,000. And you pay health insurance premiums for you and your family. That's $20,000 a year, whatever, around $1,800 a month, right? So I'm going to put health insurance. $20,000. So this $20,000 will be reported on your W-2 as part of the $100,000. Now you might say, Boris, how do I do that? I don't know who you use for payroll, but every payroll company has an option. You just check the box. It's called 2% owner share. I'm sorry, 2% S corporation owner health insurance. Every payroll company has it. I don't recommend you do it on your own, and if you call the payroll company to do it for you, sometimes they will mess it up. I strongly recommend you do this with your tax advisor. For our clients, we actually do it for them. Okay, we actually log into their payroll and set this up. But if you want to know the exact steps, you basically incorporate your health insurance as part of your reasonable compensation. Now, how does that help you? Instead of paying Social Security and Medicare taxes on $100,000, you will now pay Social Security and Medicare taxes only on $80,000. So you get a $20,000 deduction. That's number one. Number two, you're going to pay Social Security and Medicare taxes only on the $80,000. That is 15%. On the $20,000, that's $3,000 in savings. And plus, you got another $20,000 deduction. And if you're in a 30% bracket, that's $6,000 in savings. That's a lot of money, okay? That is a lot of money. I've seen, probably before 6 months ago, I rarely have seen business owner use this strategy. After we put out this strategy on YouTube and made it very known, I've been talking about it very, very loudly on social media, more prospects that are coming in to work with us for their tax advisory, I see them in utilizing it. Some wrong, some right, but the fact is the idea is there, which is pretty cool, okay? Now, let's get this going. Next question.
All right, question from Keith. Hi, Keith. He wants to know if we can write off the premium paid for our life insurance we are going to protect us with or buy-sell agreement.
Oh, say it again. Oh, that's the life insurance thing, right? Read it again.
I want to know if we can write off the premium paid for our life insurance we are using to protect us with our buy-sell agreement.
Ah, I see. Now I got your question. So generally speaking, Keith, excuse me, life insurance premiums are not tax deductible, okay? Are not tax deductible. Now, when you have a sell-buy agreement, I am not 100% sure about that. I would say 99%. I'm 99% sure that those premiums would still be not tax deductible because generally speaking, those premiums or the benefit from that life insurance, for example, will be tax-free. I don't know the details of your contract, so I will not be answering this question live because I'm not 100% sure on this one. Next one.
A question from ProCare Wellness Institute.
ProCare Wellness, listen, we don't like this. You gotta let us know what your name is. Let us know your name in the chat. All right, what's the question?
In an S-Corp, am I able to lease or only purchase a vehicle using Section 179 deductions?
Okay, to answer your question, I'm gonna sit down for this one because it looks like we're in a real studio. Okay, let's do it. Ask again. Now I'm gonna pretend like I'm listening.
In an S-Corp, am I able to lease or only purchase a vehicle using Section 179 deductions?
Well, when you're leasing a vehicle, you're not using Section 179. You're just paying for the lease payments. It's an S corporation, totally allowed. Are you allowed to use Section 179 for your vehicles in an S corporation? 100% tax deductible, okay? And 100% can be used in an S corporation. Now, when I say 100% tax deductible, I don't mean the whole purchase price is tax deductible, or I don't mean that the whole thing is deductible, depending how much you use for the business. But again, you've got to be speaking with your tax advisor. Next.
Ryan Jones and Lisa Filipovich say yes, they are interested in either call-in or chat.
Interested to chat with us?
To the call-in.
Oh, it's the call-in. All right, cool. We'll try to get that going.
Okay. Oh,
What else we got?
1 second.
By the way, anybody that participates the most questions, okay? Guys, I know we're late for this live, so we're going to stay until 1:30. I'm here for you until 1:30 Eastern time. So, again, the person that participates the most, we're going to send you the Thinking Outside the Tax box. This is $20 on Amazon. It's yours for free. This book has saved a lot of business owners so much money on taxes. The S Corporation Tax Secrets. We're going to be giving out the coffee mugs, the mouse pads, whatever you want. All we want is for you to participate and ask tax questions. Let's go.
Question from T. Bun 1973.
Okay.
Can I rent one of my residential rental properties to my S-Corp and group the rental and S-Corp as one activity to deduct the property losses against the company profits and my W-2 income?
So he has a residential property?
Mm-hmm.
Okay.
So he wants to rent one of his residential properties
To the business.
to his S-Corp. Mm-hmm.
Okay, this is T-Bun. By the way, T-Bun is asking a T-Bomb question, all right, everybody? So if you take a look on my videos, all right, on YouTube, I did an extensive video on what's called self-rental tax strategy. Generally speaking, when you rent real estate, one of the biggest reasons why people buy real estate is because it produces for them a paper loss, okay? Now, what happens, that paper loss is not always tax deductible to you, because it's a passive loss and you have an active business, and that passive loss cannot be deducted against that passive loss cannot be deducted against active income. Now what happens is that when you buy a building, a real estate to rent to your business in a separate LLC, IRS says, hold on a second, that is one activity, all right? Any losses produced in that real estate can be deducted against your active business income. Let it be an S corporation, for example. But T-Bone is asking, hey, can I do the self-rental even if it's a residential property? The answer is yes. There is no restriction if the property is residential or commercial. As long as it's being used 100% for the business, you are 100% owner. You don't have any other tenants, so then you meet the economic test. So the property and the business would be considered as a one activity. Great question. Next one.
Question from Fulu.
Fulu.
Which are the best strategies for permanent tax reductions apart from mega backdoor Roth? Is mineral deposit donations reliable strategy? What are the risks there?
What's the name again?
Fulu Faltu?
Fulu. So
Or
besides
fully? I don't know.
backdoor, right? He said. Read the question again.
Best strategies for permanent tax reductions besides for mega backdoor Roth? Is mineral deposit donations reliable strategy? What are the risks with it?
So I'm not going to talk about mineral deposit tax strategy here. It is a little bit outside of the scope of this video. So we're going to talk about backdoor Roth IRA and something you said, a keyword, permanent, right? He said permanent tax deduction.
Yep.
So first of all, the backdoor Roth IRA, I don't know if you meant permanent tax deduction or permanent tax savings, right? Meaning, so for those of you that don't know, there's two types of retirement accounts we have in America. Okay, now we have many types, but there's either a tax deductible retirement account or non-tax deductible. So any money that you put into your retirement account, such as traditional IRA, 401k, SEP IRA, solo 401k, you get a deduction. And then when you retire, you take the money out. Whatever you take out, it's taxable to you, plus whatever your retirement account has earned. Then there's another thing that's called a Roth IRA. Any money that you put in there is not tax deductible, but anything in there can grow tax-free. So what Fool is talking about, backdoor, I think he said mega backdoor, right? Mm-hmm. Where, because Roth IRAs are limited to like $6,500 a year. I think that was the limit for 2023, okay? But the mega, that means you can have a regular 401k or a solo 401k, and instead of having it a tax deduction, make it into a Roth IRA. So usually you can really build a big nest egg of tax-free income in your Roth IRA. So great strategy, great question, Fool. Next one.
Question from Jonelle Smith Tyler.
Jonelle Smith Tyler. We'll just go with Jonelle, okay?
Say hello in the chat, Jonelle. When using the Augusta rule, do you comp to venues or would you comp to a similar size house? Example, Airbnb.
Yes, great question. So first of all, for all of our listeners, let's just kind of explain what is an Augusta tax strategy, okay? It's a 14-day rule, 14-day tax-free rule. Now, anybody in America that has a home, whether you rent it or you own it, if you want to, let's say you're traveling to Europe, you decide to travel to Europe and rent your home, I don't know, up to 14 days to some stranger. Well, IRS says you don't have to pay any income tax on that money that you have earned. Business owners have found a great opportunity here. Like, hold on a second. If I can rent it to a stranger, I can rent it to my business for business meetings. Why should I travel somewhere, meet with my partners where they're located in different locations, or pay for a conference room to rent it when I can really rent my home to myself up to 14 days, right? Some business owners rent it on a quarterly basis for the quarterly board meetings, whatever that may be. Some rent it on a monthly basis, okay? So a 14-day rule actually allows you to rent it from the business, take a tax deduction from the business, and you don't pay tax on it personally. Now, there are rules to follow. Please don't abuse this strategy. I just did a video on it a few weeks ago, right? I think we posted how IRS actually audited the Augusta tax strategy. Some business owners were just two or three partners writing off $3,000 per month with no backup of why they were doing it. Now, Jonelle is asking, Boris, if I'm going to rent to myself, what rate do I charge myself? Can't just start charging yourself $2,000 for like renting out a space in your home. So you need comparable rate. So Jonelle is asking, should I get a comparable rate of the same house that's on Airbnb or some venues? I would go with a safe option. I would go, if you have the same house as yours or similar, being rented in your area, on Airbnb for $200 a day, then that's what you pay rent to yourself. Hope that answers your question, Janelle. Next one.
Just a follow-up. Does Augusta rule apply to a timeshare?
Does Augusta rule apply to a timeshare? No, because it is not because this residence is being rented for more than 14 days. So the 14-day rule works if the residence, the place that you own, hasn't been rented at all more than 14 days a year. Next question.
The second question from T-Bun. Can I cost segregate a house that used to be my primary residence for years but has just been turned into a rental?
Yes.
Next question.
Let me elaborate on that. T-Bun is asking, hey, I had a house, right? Residential. It was personal?
Mm-hmm.
Okay. He said it was a personal residence, and now he turned it into rental.
Mm-hmm.
And now he wants to do what's called a cost segregation. Ladies and gentlemen, for those of you that own real estate, you have a lot of real estate, you just start investing in real estate, I have a lot of videos on this. Cost segregation is a big money maker. Individuals such as Donald Trump, Robert Kiyosaki, all these guys that invest in real estate, all these names that you want to say. Okay, why do they invest in real estate? That's because IRS says, you know what? We can give you something beautiful, which is called a cost segregation. Cost segregation, the name speaks for itself. You've got a property. Generally speaking, when you buy a property, you can depreciate it over 27.5 years. Purchase price divided by 27.5 years after you allocate out the land, bam, that's your depreciation. But cost segregation actually is written in IRS code. You need to do cost segregation first. You segregate the property out into different classes of assets. About 25 to 30% of the property can be segregated out into life class defined by the IRS code, which is 15 years or less. Now, why is this such a big deal? Because those assets can qualify for a bonus depreciation. You can get a really big write-off in your first year of purchasing it. So cost segregation is usually done by engineering companies. We do a lot of the cost segregations for tax plan. Definitely, if you don't have a tax advisor doing this for you, stop working with a tax preparer. Speak to a tax advisor about doing cost segregation. So T-Bun is asking, hey, I had a personal residence. I converted it into a rental. Can I do a cost segregation? T-Bun, to answer your question in short, yes, you can. The real question becomes is, when did you buy the property, right? That does have some of that effect of a cost segregation, because we do need to run that analysis, for example, or your advisor needs to do it. But the bigger question is that cost segregation will produce a loss for you. Are you able to deduct that loss? Because remember what I said earlier, losses from rental real estate are considered passive. If you don't have any other passive income and you're not considered a real estate professional by the definition of the IRS, this loss will not be tax deductible to you. I've seen people that started working with us for tax advisory do cost segregation, generated nice big losses, but they can't do anything with them, and they paid money for cost segregation. Next question.
Question from Herb Cohen. Follow up to David's situation. If he has $600,000 in the bank, can he use it to pay a salary for several years, take the salary expense deduction, and use employee deductions to create an overall loss?
This is David.
He's following up on David's question.
And what's the name?
Herb.
All right, Herb. Hello. Say hello in the chat. Okay. So he said, hey, David asked a question earlier, which David had a $600,000 left in the bank as an S corporation. And David was asking, hey, if I take it out, do I pay taxes on it? We already kind of answered it already. We said, no, you don't have to pay tax on it. Now, Herb's saying, all right, so if that's the case, can he use the $600,000 to pay salary for himself in the future?
And use employee deductions to create a loss.
Use employee deductions to create a loss. So you want to create a loss from the business by using this. It's not, I'm not really sure I'm following, but let's kind of work out two situations, right? Let's say in that year you have zero income, but you've got $600,000 in an S corporation, so you pay yourself, let's say, $300,000 salary. So you're saying, Boris, I'm going to create a $300,000 loss. Not necessarily, because remember, the $300,000 is going to be reported to you on a W-2. So you may have a loss that also depends on how much basis you have in your S corporation, but it's going to be a wash. If you're going to pay to your employees, well, is the business active? Because you can't take losses in a business that is not active. So you're saying, Boris, can I create $600,000 use $600,000 to create losses? I can't answer that question for sure right now based on the information that you give me. If you properly strategize, if the business is still active and you're going to use $600,000 on ordinary necessary business expenses, you might be able to. Next question.
Okay, question from Ryan Jones.
Ryan, say hello. By the way, do we have participants? Are you making a list who's
I
asking
do,
questions?
I do.
Guys, we're giving away Thinking Outside the Tax Box. S Corporation Tax Secrets. Okay, this book, by the way, I don't know how many copies were already downloaded.
Like over
30,000.
since last I yeah.
30,000 copies, guys.
Yep.
30,000 copies are circulating online for this. People are paying money for this. $9 today. It's free. It's yours. I had so much feedback. People are Boris, I read this book, and I started saving money on taxes. It's right here. It's yours if you participate. Okay. Plus, we got a bunch of other stuff that we're giving away. So, all right, let's do it.
Question from Ryan. I converted to an LLC. Okay, sorry.
Listen, you gotta learn how to read the question right.
Sorry,
Ryan.
These are not my terms. Okay, converted LLC to S Corp for 2024. Do I need to account for the funds I started the S Corp with at the beginning of 2024?
This is Ryan. Read
Yes.
the question again, Marish.
And Ryan is apologizing. He says his handwriting comments don't disqualify me from the giveaways.
Well, you know, until you corrected yourself, you said your handwriting is as bad as mine. I was like, all right. We'll take his question.
Okay,
Let's go. Let's read it again. So he had...
converted an LLC to an S Corp
Okay.
for 2024.
Good going. All right.
Do I need to account for the funds I started the S Corp with at the beginning of 2024?
Well, the LLC that you started already, that is the same business as an S corporation. Remember, the business structure did not change, the EIN did not change, the business bank account, the expenses didn't change. You just elected an S corporation status. S corporation is an election, okay? You elect to be an S corporation. So whatever money that you started, either in LLC or spent on becoming an S corporation, whatever that is, all of this money that you spent on is a deductible expense to your S corporation. Hope that answers your question, Ryan. Next question.
Okay. Second.
Guys, we've got 15 more minutes. Okay, then we're going to be doing the giveaways. We're going to probably stop in about 12 minutes. We're probably going to be stopping in 12 minutes, and then we're going to be doing. Oh, we're going to be pulling out the name, right?
Yeah, but I
we
don't
have paper?
I don't have paper to
Can we
write
get a
the
paper?
names.
Would it be possible to get a paper? Thank you so much. Like just
Okay.
one sheet of paper is good. All right.
All right. Pro Wellness Institute. He says his name is Dominic. And
Well,
you've-
that could go both ways.
Yes.
Could Dominic or Dominique, right? So
And you've spoken before.
we've spoken to both before, so I don't know. Let's go.
Okay, he says or she says, I'm in an S Corp. Am I able to lease or only purchase a vehicle using Section 179
We answered that.
deductions? Did I?
We answered that question.
Oh. Okay. Did I? Okay. Question from Fulu Faltu. Operating LLC company under holding company LLC ownership. Which LLC should elect S Corp status? The holding company becomes S Corp or operating company should elect S Corp? Both spouses are members.
So we've got a holding company. This is who? Fulu, you said?
Mm-hmm.
Fulu, hello. We'll figure it out. Okay, is the live still
You
working?
know when we do the call, yes?
It is? Okay. What'd you say?
Oh, yes.
Yeah, we're good.
here.
Okay,
I
so,
think when we do the call-ins, we'll be able to really get the names
Yes.
right.
okay, so we've got a holding company that owns an operating business. I'm just gonna put operating, OB, and this is also an LLC, I'm guessing, right? His question is, what should I convert to an S corporation? Either a holding company or an operating business, correct?
Yeah. Which LLC should elect S Corp status?
It would be an operating business. Usually you would convert your, generally speaking, ladies and gentlemen, sometimes it happens that you've got an S corporation or you've got one business, you got a business 2, you got a business 3. There's always a main business that produces the most cash. You might want to speak to you definitely want to speak to your tax advisor. Hey, do I convert my S corporation, which is the operating business, do I convert my operating business into an S corporation? How do I structure the rest of the businesses? Okay, but you always want to make sure your operating business is an S corporation. Next question.
Okay. Herb Cohen following up again. Following up to health insurance secret sauce. Does the employee deduct it on their personal returns as well as the business taking it as an expense?
Yes, so the business is, it's weird how it works, the health insurance. So what happens is that, I always questioned it, why is it like that? But basically what happens is that it's reported on your W-2, so it's a deduction on the business. Then because it's on the W-2, it's an income on your personal. And because it's a health insurance for more than 2% owner, it's a deduction on your personal. So it's like, what is it? Deduction, income, deduction. So deduction, income washes each other out, and then deduction. Very technical, don't worry about it. Just work with a tax advisor and he'll help you to do that. That's why I never really get into technicality of it. I just say make sure it's part of your W-2, make sure you don't do it by yourself, make sure you do it with a tax advisor. Next question.
Question from Gigi. Gigi.
You remember Gigi? We had Gigi before.
Oh, we did?
Yeah,
no,
I think so.
this is a different Gigi.
This is a new Gigi. Okay, let's go.
Taking owner's distribution, do we need to take out before the end of the year?
Owner's distributions doesn't matter. I'm guessing you're an S corporation. If you have money accumulated in the bank account, you can take it as an owner distribution. Again, given the fact that you took out a reasonable compensation throughout the year. If you did not pay yourself a reasonable compensation, you want to make sure you pay yourself a reasonable compensation, then you can take those distributions. You can take those distributions before year end. You can take those distributions next year. It doesn't really matter. Okay, when you take those, that's your money. You're entitled to it as long as an S corporation owner, you pay yourself a reasonable compensation.
Okay, thank you. We have a question from Vipul Bodar. Thank you for explaining health insurance premium strategy. I have health insurance from W-2 job, but I pay some premiums. Am I able to deduct that premium through an S-Corp side hustle?
Oh, that's a great question. I'm glad you asked that question. So here's the thing. He has a W-2 job, right? So he's got a W-2 job, but he also has an S corporation side hustle. He has health insurance from the job. Okay, if you have health insurance from your job, or if your spouse has health insurance from her job, whether you use that health insurance or don't use that health insurance, IRS says, sorry, you can't use that health insurance secret sauce deduction. We like to call it secret sauce, right? For more than 2% shareholder. So great question. So no, you can't. So you want to take advantage of whatever your job offers, if of course you can afford it and it's good for you. Next question.
Okay, question from Iron. My husband owns S-Corp. My husband owns 51% of it. If I want to take the majority of the share, how do I figure out how much money I have to come up with?
Wait, read it again. I was so distracted by you. Let's read it again.
S-Corp. So they have an S-Corp. Husband owns 51%. If I want to take the majority of the share, how do I figure out how much money I have to come up with?
This sounds like when you say I want to take majority of share, like my husband owns 51% and I want to take majority of share of his business. I don't know. This is like a legal advice over here. Do we need to see a divorce attorney? Do I need to bring in a divorce attorney here? I don't know. My husband owns 51%. If I take the majority share, I think you might want to elaborate on that one. Next question.
Okay. A question from Fulu. Fully.
Fully or Fulu? Make up your mind.
Fully. No, she says no divorce.
No divorce. So why are you dipping in then? I don't understand. Next question.
How to structure the management entity to pay kids from S-Corp. Income shift.
The whiteboard. And I think this will be the last one before we start drawing. How much time do we have? Yeah, this will be the last one because I'm going to take some time on this one. All right.
Wow,
We have a lot of questions. We have a lot of unanswered questions. Well, why aren't you reading them fast enough? Sorry, guys.
Can't even say anything back to you.
Not me. It's not me, guys. It's not me. Okay, so who is it?
Iron, by the way, is clarifying. It's for minority certification.
Ah, I see what you mean. Okay, so let's go back to Iron for a second. Okay, so Iron, let's read her question. She's not seeking a divorce, thank God. Okay, let's go back to Iron's question.
Oh, did I lose it?
Okay, I think she said that her husband owns
51%.
51%.
I got it.
Okay.
She wants to take the majority of the share. How does she figure out how much money to come up with?
You're not buying it. You're transferring it, okay, from husband to you. There is no transfer tax because it's between both of you. Okay, so, and I'm guessing you guys are filing a joint return. So speak to your attorney how to basically restructure your agreement where you own more than your husband. You can certainly do so with an S corporation. There shouldn't be any tax consequences, and that could help you with whatever it is that you're seeking, because I know you want to have the anyways, what was it, the minority interest, right? Because of the, anyways, any grants that you're applying. I got lost here, but you should be able to speak to your attorney about that, but it should not be a problem. Now, I had a question that I wanted to address. Somebody said about hiring children. We're going to end on this one.
No, yeah.
Let's go. What's the question again?
How to structure the management fully.
Oh, again, is Fully winning today?
Fully's on the top of the list right there.
He's on the top of the list. All right, Fully.
How to structure the management entity to pay kids from S corp.
Okay, so I'm just not sure how deeply we should go into this, but I think what Fully is asking, hey, I have an S corporation, and if I'm going to pay my children from an S corporation, I'm going to be subject to 15.3% payroll tax, right? Which is, you know, your child pays 7.65 and you as a business pays 7.65. I want to pay, I'm speaking for you Fully because I'm guessing that's what you're saying. You want to set up a family management company and pay your kids from the family management company. And you're asking, how do I set up the family management company? Well, first of all, it can be under your spouse's name, okay? And it can be a DBA, meaning to say a sole proprietorship doesn't necessarily have to be a single member LLC. It can be a DBA, open a bank account, get an EIN number, have a contract with an S corporation, a legitimate contract, provide legitimate services where your kids will actually be employed by an S corporation from the family management company. Track the timesheets, track the time, pay your kids comparable rate, and you can definitely take that as a tax deduction. So Mariana, are we ready?
Can you do one more question, because I think I missed one and I just want to be
That's
fair.
your problem. You can answer that one.
I can't answer that one, but I do need a pen.
Okay. Can we get a pen? Guys, can we get a pen? Thank you. All right, what's the next question?
The question is, I'm selling 2 very large properties this year. How do I set myself up for that? I'm not really interested in doing the 1041 exchange. What are my options?
Say it again. Who's the name, by the way?
Dominic. Mr. Dominic.
Oh, it's Mr. Oh, so we got that. All right, cool. Mr. Dominic. All right, so he's doing what?
I'm selling 2 very large properties this year. How do I set myself up for that? I'm not really interested in doing a 1041 exchange. What are my options?
Selling 2 big properties. Okay. And doesn't want 1031.
1041.
Okay. So, Dominic, there's few ways you can offset your capital gains. It is probably a little bit outside of the scope of this video. You definitely want to speak to your tax advisor. Can you offset your capital gains when you sell 2 big properties or 1 property and you have a nice big capital gain? You definitely can. If you don't want to do 1031, that's totally okay. Then my answer will just be a little bit outside of the scope of this live. It has to be more intimate, okay? Reviewing your information in detail. So the answer is yes, you can. You've got to get yourself a tax advisor. If you have a business, you've got a profitable business, I strongly recommend all of you, every business owner that is watching this live right now, get yourself a tax advisor. Don't just rely on the numbers that your tax preparer putting the right numbers in the right boxes. What you need is tax planning, being proactive, and taking those deductions throughout the year. Doing tax planning right now, January, is the perfect time. Not in November, not in September, when you get a wake-up call, or October with your big tax bill, okay? It's right now, or better yet, it's yesterday. All right, guys, thank you all so much for watching. What's that? Oh, if anybody's interested in our tax advisory, you can go to www.taxplanningcall.com. Mariana's going to put on the link right now. We're also going to be doing the winner right now. But again, it's www.taxplanningcall.com. And we can write that on the board. And Mariana, you got the names?
Yes, I do.
All right, let's do it. We've got 3 winners. 3 winners? 4 winners?
I could do 4 winners.
Well, let's give away a couple of our coasters. Let's give away 3 coasters. All right, guys, we're going to be giving away the coasters, and then we're also going to can give away the mouse pad. Let's go. We got a lot of winners. I'm going to be pulling the names out of the hat. Who's ready? Let me know in the chat if you guys ready. Okay. So that's taxplanningcall.com. you can go ahead, fill out an application, and if you guys are, if your business meets our criteria with the clients that we work with, you'll be given a calendar link. Oh, excuse me. You'll be given a calendar link to schedule a call with my team. www.taxplanningcall.com. Thank you guys, and let's do the winner. All right, you got the names?
Yeah. 1 second.
All right, cool. All right, cool.
So one more for the poster.
I see the names.
Well, this not that one.
Not that one?
That one.
Is that for the coaster?
These are for the coasters.
Which ones?
These are for the coasters, and these are for the books.
Oh, so I pick one out? Oh, this is for 3 coasters.
This is for 3
Okay,
coasters.
so we're giving away coasters too. Oh, I gripped it. Why? All right, cool. It is Herb Cohen. Get with me. It's a long email address for live. At Boris M Tax. BorisMTax.com. Okay, so we've got Herb Cohen. Got a coffee mug must coaster. You're gonna remember these, right?
Mm-hmm.
All right, cool. We got Mr. Dominic. Congratulations. All right, who else we got here? Are they saying hello? Say hello in the chat if you're still watching, by the way. Otherwise, we ain't sending it to you. I'm kidding. All right, the next one is Jonelle Smith. All right, you guys getting coasters mailed to you. Wow, Mariana,
Yes.
that's very generous of you. This one doesn't look so good. Who should we give it to? I'm kidding. All right, next one.
I designed them.
Next one. What are we giving away now?
All right, now we're giving away the books.
Oh, the books. All right.
So you're doing 3 books, or what are you doing?
No, we're doing one thinking outside the tax box. Oh, you got how many names you got there?
I thought we were doing 3. Yeah.
Okay, so we'll do 3 books. Let's do it.
Okay.
All right, we're gonna shuffle the name. All right, so first we're giving away first 2 books, which will
bring
be
a hat
thinking
next
outside
time.
the tax box. All right, first name. Oops, sorry. First name here, T-Bon. All right, congratulations. We're gonna be mailing this to you. Just email your address to boris.musheyev@borismtax.com. Mariana also put it in there. And the second one, these are the names, right?
Mm-hmm.
Okay, we got Iron. This is not the first time Iron wins, by the way.
Is it?
Yeah, I think Iron won something else last time. Iron, congratulations. We're mailing this baby to you. All right. And, ba-da-ba-bum. Okay. So, S Corporation Tax Secrets. And this is Fully. Nice. Fully. Congratulations. All right, cool. All right, everybody, thank you so much. Let us know in the chat. Yeah, people are saying thank you. Awesome. You're welcome. You're welcome. We're going to send that over to you. Please email us your address, boris.musheyev@borismtax. If you're interested to work with us for your tax advisory, www.taxplanningcall.com. We're going to go live again we can't do in 2 weeks, right? We can't do next week. We're going to go live again in 3 weeks. This time we should have a phone number for you guys to call in as well.
And we're going to be on time.
Yeah, we're going to be on time. Okay. Thank you so much.
Thank
Till the
you.
next time.